Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Outlook, where we look at our big six markets and we create a trading plan for tomorrow. In this case, tomorrow happens to be the 16th to 16 of 17. And basically the plan of this is to go through the big six markets that we trade and look to formulate an attack method for tomorrow so we can be as prepared as possible. Now, for, going into all of the different markets and everything, kind of an interesting day today. Before we jump into all of that, make sure to swing on over to Slingshot Futures, scroll down and click on the Join the Daily Outlook newsletter. That will log you into and become part of our mailing list so that you are notified of all of the interesting stuff going along, as well as you'll also know when this comes out every single time. Now, every once in a while, we'll throw some extra little perks and tidbits in there that won't be posted in this video. And this time around, we have some interesting statistics of crude oil and gold on Thursdays. Very interesting there, as well as a couple different stocks to maybe take a look at. So make sure to sign up there, as well as scrolling down to the bottom and loading up the blog post every single morning. We load up major levels of support and resistance we're going to be watching that day every morning. So you'll always be in the know when it comes to that. So let's jump on in here, looking at the FGBL, looking at the Bund. Not a whole lot of action here. The Bund, lackluster, I think is the first thing that comes to mind. We really haven't been able to get out of this range, and you can see a fairly well-established range inside here. There's a couple times that it tried to deviate outside of it, but it quickly snapped right back in, and every time that's happened, even on news, right? Big news forces it lower. All it managed to do is go a full deviation down. You measure up the range, deviate that lower, and you have a bounce exactly off of that area. Not really much of a surprise. So we're seeing this range kind of deviate its way down and then right back up. And if we do get a break higher, the full deviation up is at 163.60. And even more interesting, that move higher would also coincide with a prior major swing high before the drive down. So a lot of potential interest around that 163.60 area to see if the sellers want to come back in. Overall, we're in a range. We know what to do with a range. Buy low, sell high, stay out of the middle. You don't want to deal with the middle. And this is a really good example of why, right? If you tried to trade this in the middle, you might have got a little bit chop and slopped up. But if you were trading at the extremes, you had a very good day of trading. So make sure to stay out of the middle. Trade it as you would any other range. But if we do start breaking higher, that 163.60 area could be a nice little shorting opportunity if they can drive up. Over on gold, nice move to the upside, and I mean, just explosive. We started off the day looking like it was just going to be, oh yeah, here we go, another slow day in gold, right? Maybe in the afternoon it'll kick off like we saw yesterday. But we had a really slow, rangy day, and it didn't kick off in the afternoon this time. It started at around 8:30 with the news. 8:30 caused the market to have just a massive dive lower, and after that big move down, they got good follow through and they just gave up. Now, in the market psychology video today, we were talking about how there's just so much bullish pressure in here that the sellers are going to be very unlikely to try to take that the first time around. And sure enough, they smashed higher. And now they've gone to a full reversal all the way up. We have a full news reversal. Major objective on that was at 1233.9. And we've already met that. The first time we hit it, big stiff rejection, about 20 ticks or so. And now we're back to that area again. Now, I would assume that this is mostly just a profit-taking area, not a huge area of resistance quite yet, mainly because we have two other huge levels above us that the market could be gunning for. We have major targets up at 36.9, and the big boy, if they can get their running pants on, up at 39.4, and that's kind of what we're going to be looking for going into tomorrow's session. Now, for gold, do I want to buy right here? Probably not, right? This is pretty high, and we're still in an area of resistance. Best case scenario, what I would like to see is either a breakout pullback and then continuation, or get a nice push down, trap the lows underneath that 31.5 to 31 even, and then look to shove the market back up. Either way, not going to buy right now, looking for a better price or proof on a breakout before we go jumping in. On the bonds, I mean, what do you say? It's the bonds, right? Really slow market. Started off right off the bat, very tight little range there, and then we broke down. Now, this is very similar to what we saw yesterday. We started off the day with a very small, tight range, and it broke down. Yesterday, though, was a little bit different because we had to move up, a new low, a new high, failed above that previous high, broke back in, tested, failed down, came back to the lows, broke back in, retested, and tried going. This time around, though, we didn't get any of that, right? Looking at this morning range, you'll notice it had successive lower highs, right? It kept going lower and lower, and it wasn't able to break those extremes. So you did have a little bit of a clue of that potential bearishness, starting off with a weak bear channel down. But when we had that big slam lower, they had good follow through, and then, wait a minute, something's happening, right? We found a little bit of a bottom between 149.20 down to 16. After they found that bottom, it's very common. Sellers who maybe sold up here or along the way are going to take profit. It makes sense, right? Especially at $31 a tick. So they're going to start taking profit on the way down, but the assumption is that we're going to get resumed selling right back down again as soon as they put in a top, wherever that happens to be. In this case, though, very similar to gold, we put in a lot of bullish strength, and the sellers tried, but they couldn't even make it down to that bottom edge where we found all of that wicking before turning back up. Now, when they turned back higher, they also couldn't get very far up before putting in a potential top here, and we'll notice that as soon as they closed above it, they immediately slapped right back down again, and that ends up being a twin reversal right back lower. And when they came back to retest it, sure enough, that confirms it. So that 150.07, 06 area, big level of interest for the bonds. And along with that, the bottom edge, arguably up to 21, but 149.21 down to 149.16, big area of support. And now we're just looking at this thinking, now we're probably just going to go into a range once again. So going into the overnight session into tomorrow, expecting more of a range type sentiment, buying low, selling high, and staying out of the middle. On crude oil, man, crude oil, this is a different beast today. This thing is nasty looking. This is, I think, the definition of barbed wire, right? If you zoom out and you just kind of disregard the candle bodies and just look at the wicks, right? Focus on the wicks here. There are wicks all over the place, right? That's where the definition of barbed wire comes in, because it's easy to get cut when you have all of this whip back and forth all over the place. Now, today was the inventory report, so you expect to get a little bit of volatility, but not this much back and forth. Today was really gruesome on the crude oil markets, and I don't know, I'm assuming a lot of people probably had a hard time trading today. If they did, they probably didn't get very many trading opportunities just because of this back and forth nastiness. Now, the overall movement, the extremes are really what I would be focusing on, and at the moment, the extremes are down 52.81 to 73, and at the highs, 53.51 down to 40. We are seemingly putting in a possible wedge, and we're nearing the lows of it. The highs not super confirmed yet, but you can definitely see that type of wedge formation. We may also be putting in a slight little top, kind of like a head and shoulders, right? Left shoulder, head, right shoulder, and trying to turn down. The bottom looks really gross for something like that, but that is kind of the scenario. We could be putting in a shallow area of resistance around that 24.25 area, 53, that is, 24.25. So at the moment, really what we're looking for, we're dead in the middle, and this is not a place that I want to be trading crude at the moment. So we're looking to buy low and sell high, and those happen to be at the extremes. Not really going to be interested in crude until we get some movement down to 81, down to 73, or up to 40, up to 51. Anything inside there is going to be really difficult trading, and probably, honestly, better off just sitting on hands. On the Nasdaq looks a lot better. We've got some really nice bullish momentum to the upside. Beautiful bull channel working its way higher. No breaks from the buyers either. The sellers had one shot and completely fell apart right back up again. So, that was a huge bear attempt followed by a nice leg down, and that trapped them out. And likely that's the reason why we had such a big continuation move up. A lot of sellers got stuck on the wrong side, and probably on that one right there. And well, yeah, that's what happens. You start trapping folks out and it runs the other direction. Now, likely we are putting in a slight little top. We have a 3 push wedge high, and we are a little bit exhaustive up at the highs. Pretty big bull rally at the very end of the day usually leads into a range in the overnight session, maybe even a pullback. And that's really what I would like to see. I would love to see this go range bound, slight pullback, a little grindy, get back down into that 53.0225 to 53.01 area, and then look to resume that buying right back up. Now you'll notice this big thick line up here. We have a huge upside objective at 53.19 even, and that would be the major target going into tomorrow's trading session. So looking to buy a pullback, and we've got some pretty big targets above us. Over on the S&P as well, nice bullish rally to the upside. In this case, we have more of a wedge. Not the prettiest looking channel, especially making these lower highs, so it fits a lot better as a possible wedge. Now, the wedge formation here, this is pretty obviously not as bullish as the Nasdaq, right? This is a little bit more two-sided, a little more back and forth. We're still maintaining above that 2300 level, but you can see the struggle that all of these moves are having. The volume versus the volatility, very low. So what I would really like to see here is a pullback. We're putting in the same type of pattern, a 3-push wedge high, a failure at the highs this time with a potential twin reversal. So we're getting a lot of weakness up at the highs here of a possible wedge. So in this type of scenario, yes, you could look to buy just a quick little trap down to 44, 45 half or so. But because I would, the weakness that we're seeing here in the S&P comparative to the Nasdaq, I would much rather see a deeper pullback around this, this 2343 down to 2341 and 3/4 area instead. Give us a little bit more meat on the bone, and then we'll look to bite and try to drive the market back up towards the highs. Primary objective, because of the weakness at the highs, might not be to a new high, right? Like you normally would look for. It might be sub-high or maybe a double top, so definitely keep that in mind. So that's going to do it for this one. For you folks that are getting this from the newsletter, make sure to check out some of those interesting stats and some of the stocks that we're talking about in there. Really cool stuff to look forward to tomorrow, as well as going into the next potential couple of weeks. So that's going to do it for this one. As always, if you have any questions, you can send me an email, jbrink@slingshotfutures.com. Like we always say, make a plan, trade the plan, follow those rules, and you will be A-OK. Until tomorrow, have a good one.